By now, I'm sure you guys have seen what is actually going on with my Forex funds. Obviously, this was one of the biggest prop firms in the space, and they have been temporarily shut down pending investigation by allegations of fraud in Canada and the United States. You guys are probably wondering what is going to happen with any other prop firm and what is the future for prop firms in the coming months, in the coming years. So today I'm just going to talk about what I personally think is going to happen, what I personally think you guys should do, whether you should keep buying prop firm challenges, whether you should keep trading on the prop firms, or maybe you should go elsewhere with your money. Obviously, because my Forex Funds is actually under investigation, it means that all the money they actually have in the bank account, all the customer funds, is actually frozen. So they can't actually access any of this money which people are owed for payouts, or people have actually paid for their challenge fees. While my Forex funds do have allegations for fraud, there are greater implications for the whole industry with what is going on with this company at the moment. So from the start of what's actually happened with the investigation, you can see that there's going to be, or there is currently going to be, a crackdown on all companies offering same sort of services as my Forex funds, or companies which are actually operating in the same sort of way that they were actually running. So, Director of Enforcement at the CFTC, Ian McGinley, he actually said, anyone offering or entering into leveraged retail Forex contracts without registration, or offering or entering into leveraged retail commodity contracts off exchange, is acting in clear violation of the law. So, if you are running a prop firm or you are the owner of a prop firm, this could be, quite bad for you guys to actually hear. But there are obviously still ways you guys that are watching this video can make money from trading prop firms, and how I'm going to personally do the same thing myself. When we're actually talking about prop firms, we need to talk about what actually is a prop firm and what is a funding company, because there is a difference in this. A prop firm, also known as a proprietary trading firm, they are financial institutions which use their own money, their own capital, to buy, sell and trade securities such as stocks, bonds, derivatives, like you guys have probably heard of if you are in the Forex space anyway. And when you actually trade with a prop firm, you obviously are trading the money which they actually have in capital for the company. And they'll give you a lot more capital, and you have access to a lot more capital than you would yourself from your own savings, from your own bank account. And it can just mean that you can make more profit, which you wouldn't ordinarily make. And as you guys know, with these Forex companies, these funding companies, they're actually offering up to $2 million, $3 million, $4 million that you can actually trade with them, with an expectation of a 90% profit split at the end of your trading period. And what makes this even more appealing than trading your own money is you're not responsible for any losses made on the account. So let's say 1 month you have really good profit, you make $20,000, you get your payout, you get 90% of that, so you receive $18,000. The next month you lose $10,000, obviously you don't get paid out any money, and you're also not responsible for this $10,000 of losses. So it's much more appealing than trading your own money, because if you win, you win. If you lose, nothing happens. You don't actually lose if you think about it. However, there are some requirements which you actually need to pass before you can actually trade one of these funded accounts. And a lot of the companies will actually make you pass a 2-phase assessment. So you have to make 10% profit while sticking to their requirements within 30 days, and then 5% with sticking to the requirements within 60 days. A lot of them now have actually removed the time limit, but just basing it off the average in the industry, it has been 30 days and 60 days for a majority of the challenges out there. And the company obviously takes 10%. I've seen companies take up to 50% of the profits which you've actually made on your account. So they get their money, you get your money, it's happy days, or so we thought. So over the past few years, prop firms have absolutely skyrocketed in popularity. And if you've been in the Forex space over the past 3 or 4 years, you probably would have seen companies pretty much launching every single day. If you're scrolling on Twitter, if you're scrolling on YouTube, you're probably getting ads, new prop firm, 0 time limit, new prop firm, another one. They're all just trying to undercut each other, which obviously is good for people that are trying to make money from trading, that don't actually have a lot of money themselves personally, because it gives them an opportunity to spend a little bit of money to actually make a lot of money from trading the firms. And amongst these leading prop firms, my Forex Funds was one of those, and they also claim to be the world's leading prop firm. And based on the reports which have actually been released, they have around 135,000 people which have actually signed up and purchased one of their challenge phases. And the majority of people that have actually heard about the My Forex Funds news is because of the large scale of this prop firm. I feel like if this happened to a small firm which has actually only been open for a couple of weeks, a couple of months, it wouldn't actually have been this much of big news and people wouldn't really have heard of it, but because it is the leading prop firm in the industry, this is why people are becoming more skeptical towards prop firms. Maybe it is too good to be true and maybe something dodgy is actually going on. A lot of people think that if they have the most followers, if they have the most customers signed up, that they're going to be the most reliable, your money is safe with them. Obviously, this is not the case. You've seen it before with crypto firms, you've seen it with large banks and corporations. Your money is never fully safe. There's always risk when you are putting money into an investment, into a company, especially if it is to do with trading. That trading always carries a large amount of risk. And because of the nature of prop firms and the quick growth, they haven't really been able to adjust to the regulations. And the regulations haven't actually been able to keep up with what is actually going on with the prop firms in the industry until now. So the issue with my Forex funds goes like this. So they obviously have a challenge phase like the majority of the prop firms. So these challenge fees can go up to £1,000, £2,000, depending on the account size which you actually choose. Obviously, the larger account size, the larger the initial fee which you actually pay. And my Forex funds actually claim that they only make money when you make money. So what they say is, we only make money when you do, meaning if you make profit on the account, they also make profit. So they want you to win. However, meaning that their profit is determined by the success of the traders which are purchasing the challenges and trading the funded accounts. In reality, according to the CFTC, my Forex funds was not a third-party liquidity provider, and they don't actually take the customers' trades which they say they take. And this is completely opposite to the statement which they made, because in reality, if you make money, the company, my Forex funds, loses money. And a lot of companies have actually come out now saying that they're simulated funds, so you're not actually trading real money. And they used to say, oh, we want you guys to win, we're A-booking you, we're taking your trades, we want you to win, we only want successful traders. But majority of these firms are only paying out from money which have actually been paid into their account from the failed challenges. So I said this before on my channel multiple times, I've said it multiple times on Twitter as well. If you're a losing trader and you're buying prop firm challenges continuously, even after failing, you're funding the profitable traders. So if you buy 10 challenges, you fail all 10, and then I go make 10% profit, you've then paid my payout. So they're paying people out from the profits they're actually making from the failed challenges from the losing traders. And with my Forex funds, they actually managed to receive $310 million in fees collected from these challenges which have actually been paid from the traders. And this makes my Forex funds whole situation to be considered a Ponzi scheme by the CFTC. And if you guys don't know what a Ponzi scheme is, it's kind of like known as a pyramid scheme, which you guys might know. And basically, all their revenue is generated from people signing up below them. When this report was actually released regarding the allegations for my Forex funds, it actually revealed many messages from employees talking about how they're abusing their power to hit traders' drawdown limit. So when you're trading these accounts on the challenges or on the funded stage, you have a drawdown limit. So within one trading day, you can't lose more than 5%. And overall on the account, within your trading period, you cannot lose a total of 10%. So what these employees were actually doing, they were pretty much slipping the traders which are actually doing well. So they'd make these traders breach their accounts on purpose. They did this by using special software, which actually delayed the execution of the customer's orders. So let's say you are trying to enter a market execution on gold and you press sell, and obviously it gives you quotes when you're actually going to enter the trade. And you've probably seen that if you are trading with some prop firms, this would be vastly different from the price it actually enters you in the market. And this is done on purpose. It means that you're instantly in larger drawdown than you would be normally. You're not entered at the price you're actually quoted for this market execution. And it just means that you're going to end up losing more money than you actually imagined when you set your stop loss in the first place. And obviously this is referred to as slippage. Let's say your trade is close to your stop loss and you're looking on TradingView, you're looking on another broker, and then you're looking at your My Forex Funds broker. And what they do is if it was close to your stop loss, they can slip you. So they can open your spread. They can open the bid and ask lines on your chart to a wider, which means it stops you out before prices actually got to that area on any other broker which you're actually looking at. So this is something you have to be mindful for if you are actually looking at trading with a prop firm, trading consistently, because if this happens frequently, it's pretty much done on purpose to stop you actually making money. Obviously, they're allegedly doing this at the moment. It's not been confirmed. It's not been that they've not been charged of anything like this. So obviously you have to read into it however you'd like to. But the reason they'd be doing this, and the reason why a prop firm would actually want to do this, is to reduce the payouts which they actually have to pay to their profitable traders. If they can blow an account from a trader which is consistently profiting by slipping their stop loss or increasing their commission or changing their entries, this can mean that that trader will lose more money than they would normally, reducing their payouts in the process. So in conclusion, I'm not surprised about this in the slightest. If you guys follow me on Twitter, if you follow me on Instagram, or even on this YouTube channel, you guys know I've mentioned it countless times to never put all your eggs in one basket. Simply saying, I've literally said on Twitter, and I quote, "Any prop firm could shut down at any time. You could blow your account tomorrow. Literally anything could happen." That's why you should be using prop firm profits to invest in a personal account or other businesses. The more income sources, the better. Don't rely on one. The reason I said this was exactly for the situation which is happening right now. I know so many people that only had my Forex Funds accounts, or people were relying on the payouts which they actually were waiting for. Let's say you're waiting for a 20k payout, but now their accounts have been frozen. You can't get that payout. If you needed that payout or it was your only income source, what are you going to do now? You don't even have an account to trade. So what I was trying to reiterate with tweeting this multiple times was to get traders to use their prop firm profits to invest in a personal account. Because obviously if you're trading with a personal account, this can keep growing, compounding. It can get to a stage where you don't even need to trade with prop firms. Your account gets to a certain size where it doesn't even matter if you trade in a prop firm or not. The main goal is your personal account to exceed the amount that you're actually trading with a prop firm. And the way you can actually do this is simply by using the prop firm profits which you're actually making, by using the larger account sizes to consistently deposit and trade in your personal account with your live money. The main reason why I actually like to trade with live money over prop firm money is because, let's say I need money next week, or I need money in 2 days time, or even tomorrow. With a prop firm, you have to wait for your payout, whether it be 14 days, 28 days, 30 days. Limit. These people that say they're 100k funded or they're a six-figure trader, they're not even trading with six figures. They're technically trading with 10k. It's simple, but people don't understand. And obviously with what's happening right now, prop firms are going to be changing the way they do things, and especially as one of the biggest firms in the industry is being investigated, it kind of makes you think how many firms are actually doing the same sort of thing, and are there other firms which are actually going to be investigated for maybe the same issues, or maybe they're going to introduce regulations in certain countries for the same sort of thing, which could obviously affect firms, how they pay out, the challenge requirements, and pretty much everything regarding prop firms. So what I think is going to happen with my Forex funds, I don't think it's looking too good for them, if I'm being honest. You know, the way that things have been laid out, it's clear that they have been investigating them for a while. They have, you know, a 40-page document outlining pretty much every single thing they've done with the money, how they've made the money, how they've been allegedly defrauding their customers. So I don't feel like it's just going to be, you know, a slap on the wrist and a telling off to this company. And if there are charges, I feel like you could see a few more firms either shutting down for many various different reasons. But yeah, just be careful. If you are going to go with a firm, make sure it's one that is properly researched, one that is doing things correctly, and don't put all your eggs in one basket. Make sure you invest your profits. Make sure you don't just trade one prop firm. Obviously, if you're trading with 5 different prop firms, the likelihood of all 5 shutting down at the same time or ever is a lot more slim than if you're just trading one. And obviously invest in your personal account, other businesses, index funds, whatever. But make sure you diversify with your investments.